Hello traders and welcome to OptionsXO New York session market review. The financial world is reeling as the week begins with the Panama Papers leak of offshore shell companies. 72 former and current heads of state are said to have looted billions of dollars from their own countries, including Russia, Syria, Egypt, and even the father of British Prime Minister, the late Ian Cameron. 11.5 million documents were hacked from a Panamanian law office, and Australian and New Zealand tax authorities have already begun their own investigations. With the Fed's March minutes to be issued on Wednesday, all eyes are watching the hawked-up competition for rising interest rates in the U.S. The nation's deficit is expected Tuesday to widen by $1 billion, and earnings season is just around the corner. At the moment, the U.S. dollar is struggling to recover from a two-week decline on strong labor data last Friday, but still slipped against the yen in morning trades. U.S. manufacturing grew in March after 5 months of contraction, this in spite of a slowing global economy and a still relatively strong dollar. In Europe, the Sensex Investor Confidence Index rose slightly for the first time since December, but not as much as analysts had expected. Shares throughout the continent opened their lowest in a month this morning, though manufacturing rose above expectations for March. Italy showed a 1.2% rise and Germany 0.3%, while France remained steady and Spain dropped. The zone's PMI was up 4 ticks to 51.6, but factory goods prices plunged on low demand. Perhaps echoing the Panama leak, the EU's Economic Commissioner Pierre Moscovici said this morning that multinationals should stop parking their cash offshore and pay taxes. Tax avoidance is currently costing the Union more than 7 billion euros each year. Asian markets closed trading this morning mixed, with the Kospi up 5.4 and Nikkei down 41 points, as major Japanese exporters struggle with a strong yen. Chinese manufacturing rebounded to an 8-month high, and the PMI was up to 50.2 from last month's 49. Local growth has been hard hit by the transition to a competition-based economy, but 2015 still showed 6.9%, its lowest growth rate in 25 years. With the Doha Open meeting just a fortnight away, oil was still dropping this morning, as hopes for production cuts seem further and further away. Iran yesterday reported that exports had risen by another 250,000 daily barrels, and the country is rejecting Saudi demands to cut output. In response, Saudi Deputy Crown Prince Mohammed bin Salman announced Friday that his country wouldn't cut production unless Iran and others did first. Until that's settled, we still have ahead of us today the U.S. factory orders and Canada's Central Bank Governor Polo's speech at 2. At 10 p.m. GMT, business confidence from New Zealand, and Australia's trade balance at midnight. Come back tomorrow for our London edition. Until then, have a wonderful trading day.